This is the briefing for Monday, June 3rd. I was traveling this weekend, was unable to do a briefing, as you probably already realized. But I was very surprised when I was able to finally get a look at a chart to see what happened on Friday. And as I discussed with somebody today, to me, it looks like there is absolutely some big money that understands where these key reference areas are that I've been showing. And every time we start to break down through those key reference areas, they step in with huge buying power to drive the markets higher. Now, this is Friday's trading. So you can see that we broke through this 525 area, which is very important support. It's this area of rotation, an upper extreme, and this area of rotation, a lower extreme, that suggests that the market really is having a lot of difficulty in trying to break out of this area of rotation and move substantially higher. Now, you know from previous briefings that volume has been falling off pretty dramatically. 52-week highs minus 52-week lows has been declining. And we had this huge divergence in breadth going into the high of this area right through here. And then, of course, there's a divergence today. We have a slight new high over Friday's high at the open, and you can see the divergence that occurred in market breadth. Now, what's important here is you can see there was pretty huge volume that came in on Friday. Now, you can see how we traded down to about the 517 area, and then buying came in and drove the market higher. So you can see that buying tail that came in on Friday, and that is where all the volume came in. I want to change over to, or I'm going to bring in a 30-minute chart because I think the volume here is interesting. So you remember from the daily chart I just showed that we had huge, or not huge, but we had an increase in volume that occurred on Friday as the market went lower, but then recovered and recovered very nicely. Now, this is the last 30 minutes of trading on Friday. So you can see what happened here and then what happened with volume. Volume exploded in that last 30 minutes of trading on the spiders. This is volume on the Qs. This is the last 30 minutes of trading on Friday. So you can see the volume explosion. So what we see here is, this was over 20 million shares traded on the spiders in the last 30 minutes and potentially over almost 9 million shares on the Qs that traded on Friday. So everything that we see here in this volume, by breaking it down into shorter term time frames, tells us that this was buying volume that came in. Now, if we look at what occurred in today's trading, you can see that we had lower volume today, but still we had an open that was higher. We had a sell-off that occurred, and then of course we had a volume that started increasing on the Qs and started increasing in the last 30 minutes of trading on the spiders as well. Not quite to the extent we saw on Friday, but certainly there was some big money that hit this market on Friday in the last 30 minutes of trading to keep this market from trading and closing below this 525 area in the spiders and below the 450 area in the Qs. You can see the buying tail that came in on the Qs and another one in today's trading. So there is some big money out there that is really doing everything they can to keep this market from declining. Because if we spend much time below these upper key reference areas, then if we spend much time below them, then that's going to suggest the potential that selling will come in and we could see a rotation all the way back through this range. Who that person, who that individual, who those traders are, or the banks or prop funds, I have no idea. But all I can tell from the internals of the market is that you can watch what's happening right around this key reference area, this 450 area in the Qs, and you can see the buying tails. And those buying tails come in always in the last 30 minutes of trading. So what's going to be important now is what happens if we break to the upside outside of this area of rotation, or if we break down and close substantially below the lower extreme of this 525 area. Watch very carefully Friday's low. Friday's low in the spiders comes in at the 518.36 area. if it had closed down in that area, I think we would have seen more selling that would have come in today's trading and potentially this rotation back to the downside. But in either event, this area of rotation right through here around this 525 area in the spiders and around the 450 area in the Qs is becoming extremely, extremely important. Now, in terms of overbought and oversold, we are basically neutral. So we've really kind of been from an extreme oversold to an overbought reading and then back to neutral once again. So it really should have no effect on the direction of the market in tomorrow's trading. But in terms of the short-term key reference areas, this is the 525 area. Trading below that, once again, is going to open up the potential to trade to today's low, which comes in at the 522.50 area, and then that would open up trading down to this 518 area in the spiders. The same thing with the Qs. Trading much above this 456 area would suggest a test of the 460 area, and then trading below 450 is going to open a short-term support at 448, and then potentially moving down to the 443 area as well. The resolution of this and this buying that comes in at the end of the day in the last 30 minutes of trading is going to be very, very interesting to see. Have a great night, and I will pick this back up again tomorrow evening.